how are you doing? You got your results. All right. Happy with them? Happy. Right. So tonight's class it's mainly re-looking back at the test 2, as well as talking about preparation for end of year exams, end of semester 2 exams. So basically what I want to start with is let's go through a rundown of all the topics that are going to be examined end of year, which is basically what should be sitting in your course outline. So when you go through your course outline, I think at this moment you realize we've got what we call foundational standards, which is what you find in block 1. So block 1 mainly has the conceptual framework, IS1, then you've got a pool of assets, which is there, your inventory, your PPE, your IS38, your IS40. Then you also have your impairment, IS36. Then from there we moved on to another section, which was block 2. Block 2 mainly covered financial instruments. Then it had introduction to IFRS 15. Then you did IFRS 16. And I think that was basically the end of block 2. Then block 3 was consolidations, IFRS 10, IFRS 3. Then from there you went on to look at IFRS 11, IS 27, and IS 28. Then block 4. Block 4 doesn't have much. Block 4 is mainly revision. No topic. So you got IFRS 5, which is assets, non-current assets held for sale. If you open your course outline, it's there. You ask who? Yes. What's the question? Yeah. Okay. Yeah. Okay. That was when last week. Okay, the difference between last week and today is okay, let's make a deal. We'll introduce IFRS 5. Then we'll only ask the basics of IFRS 5. Because look, here's the thing. IFRS 5 has got quite easy marks. So IFRS 5 is probably what will boost your marks in the exam. It's pretty easy. All right, so we have in terms of examining it. Okay, but don't stress too much. It's not a big deal. All right. Therefore, here's the thing. Tonight we'll revisit that test, because that test didn't go very well. I think the majority of people sitting here, we got pretty bad marks. I think the pass rate was quite low, which is not a bad situation as yet. So when you look at the contribution of the test and exam that you wrote, Test 1 and Test 2 were contributing 10% each. And then your mid-year was contributing 20% each, 20% on its own. And then that takes us to what, 50%? Is it so? 40. Oh, 40. Then you got 10%, which is for homeworks and quiz. Then that takes your contribution of your coursework to 50%, which means the final exam will come with the other 50%. Now, whatever that happened in your Test 1 or in your mid-year or in your Test 2, it doesn't really matter much, because all of that is equivalent to a final end-of-year exam. So I'm sure no one got a 0. As long as you didn't get a 0, that means you can still make it. So what you do, let's make a do here. But you need to at least give me an average of a pass, and then you can proceed to level 2. So your weighted plus your end of year, if everything then comes to a 50%, then marks are really bad. And right now you're looking for something like a 70%, so that you end up at a 50%. Then still not a big deal. Bring through that 70, okay? But if you don't get the 70 and you get a 50, doesn't mean it's a deal breaker. Because at least what you have reflected is, look, in January and February, when I wrote test 1, I was still learning. And when I got to mid-year, I was still learning as well. When I got to my final, I now knew what I was doing. Okay, so here is your 50 at the final exam. Now, if you get to that level, obviously I can't just say proceed based on 1 pass. Then I'll ask you to write another, so that you can demonstrate that that first 50 was not a coincidence. I think it's fair enough. If you demonstrate the second time that, yeah, you can actually get a 50, you really learned something, then yeah, we can go to level 2. So at the end of the day, all I'm just trying to say is, whatever that has happened, that's past, that's history. You can't change it. What you can change is the future, and the future is your end of year exam. So let's give all that we have for that end of year. You're going to have 2 papers. One of the paper, obviously, is going to have strong consolidations. Then the other paper is going to be a mixed bag of a lot of stuff. Yeah. So at least those 2 papers, you should be able to get a pass mark. If you don't get a pass mark, it becomes quite difficult for us to talk. Now, secondly, test 2. Before I give my feedback, I'd like feedback from you first. What was going on in that example? I've placed 8 mics in the room, so everyone can actually contribute. What went wrong? What was going on? So that at least I know what to fix. If it's water that I didn't give you, then next time I'll give you water. Right, what was the challenge? Does anyone want to share? Okay, where are the mics? All right, please pass on the mic over there. Going back, then you guys, this is the mic. And then, does anyone have a mic in this row? Yes, so there's a mic at the back over there. And another one over there. Great. Right, let's start with, yes, my lady. Okay. All right. Okay. I hear you. Thank you. So she says she was overwhelmed by the marks which were allocated to each required, especially those of journal entries. I think one had 49 marks. Yeah. Okay. Did anyone else face the same challenge? Okay. Welcome to CTA. So that's going to happen a lot of times. Okay. Let's get used to it. But we'll talk about the approach when you see such a required. Okay. Anything else? there anything else which you struggled with? Yes. Okay. So he says he struggled with provisions. Okay, okay. But the good thing is you did identify that there's a provision story in the exam. All right, that's good. At least it's something. If you manage to identify that there's I-37, that's a start. Okay, that could give you a mark. Yeah. It's better than someone who did it at all. Anything else? Is there anything else? Okay, it's fine. I'm sure more contributions will come through as we talk. Now, here's the first thing. When we were studying for the exam, what were we studying for? Because basically there are 6 things that you need to practice on if you're preparing for an exam. So the question is, did you prepare for those 6 things? Which also talks to, as you go to the end of your exam, if those 6 things are not solid, you can have a repeat of test 2. So I want to start with, do we know the skills that we require that get tested during the exam? Let's bring them on. Right, let's do this. What are the skills that you need to work on? Each time that you sit and you say, I'm studying, what are you studying? What is the objective of each study session that you have? Yes. Okay. So he says the first thing that I'm studying for is my technical knowledge. So if you're studying for your technical, that's skill number 1, that you say, if I get into the exam and I don't have technical skills, then I'm in trouble. Okay, so it says technical. That's key. I agree to that. Now, point number 1, technical skill. I'm sure everyone was studying for that. So you spend a lot of time going through your technical. And for some of us, unfortunately, this is where we started and this is where we stopped. You only were studying for technical, which means if your focus was there, you only had 1 out of skills ready for the exam and 5 skills not ready, then obviously you're going to have some trouble. What's the second one? Besides technical, what else do you study for? What else? Is this all we do? Okay, let's be honest so that I know. Is this all we do? When we are studying, we sit down and we're like, today I'm studying IFRS 3. So I'm reading the concepts of IFRS 3. Then I'm going to do a practice question to practice on those concepts. And then when you feel like you understand them, you'll be like, yeah, objective metric, go and sleep. Tomorrow you do the same thing for another standard. Do we do anything more than that? Yes. So he says he also works on time management. That's skill number 2. Agreed? What else? Okay. So may I please ask for the benefit of the guys who are online to use the mics? Okay. Right, so she says, I also practice on application. Now, this is key because your application talks to the name of your course. Your course is Applied Financial Reporting. It's not financial reporting, which means when you understand the concepts of financial reporting, but you're not able to apply them to a real-life scenario, you're still going to fail. But your application, it's part of your skill that you work with when you study your technical. So if I put it as 3, that means we now have 7 skills. What is skill number 4? What else do you focus on during study? Things that we say, these things you need to do in the exam. Hello? Something related to reading time? What is that? Huh? You also need to study for comprehension. Comprehend. EI. Does comprehend have E or I? Okay, it doesn't matter. Comprehension. Let's go. Yeah. But you are comprehending what? The scenario. Okay. Which comes down to how much did you understand the scenario? If you didn't, you're in trouble. 5. What else? What other skills do I need? But look at the scenario, yeah, I can comprehend, I'm good. Is that enough? What else do I need? Come on, guys, time. You also need to be able to understand the required. Thank you. Now, understanding the required comes in 3 forms. What are you understanding when you see a required? For you to say, right, I understand this required, I'm ready for it. What are you looking at? Yes.
We're looking at
Thank you. So she says, number 1, I'm looking at what is the task at hand. You still remember we talked about tasks, we talked about the differences between explain, discuss, critically evaluate, review. Still remember those things. That's the task. You need to know what has been tasked. What do you want me to do? But the other challenge is you also need to know how does the examiner want you to communicate back that task. So you also have communication. Is there a mark which has been allocated specifically for the manner of communication? And lastly, your requirement also has got scope. Where do you start? Where do you stop? So that you don't write unnecessary stuff. Don't write garbage. So if you find your script having a line which is going down, you missed the scope part. You're writing some other things which are not part of the scope of the requirement. And then that was number 5. Number 6, before you start writing, what do you need to do? Before you start writing? Yes. You need to plan. Thank you. So planning. is part of a skill which the examiner is looking for. Now, here's the thing. You know exactly I need to go and write an exam, which has got a technical skill, which will be there, a number of technical skills which will be examined. So you definitely know I can't go to the exam without doing my technical. I know everyone understands that. So you spend a lot of time on technical. I'm happy with your technical. But the problem now is, how many times have you sat down to say, I'm practicing on time management? That is the objective of my study session today. I don't care about the number of marks that I generate. But what I am interested in is if I'm attempting a 20 marker, can I finish that 20 marker in 1.8 times 20 minutes? If I don't, I've got a problem with my time management. Because the thing is, time management, if it's an issue right now, when you're writing a paper which is written financial reporting, next year it's going to be trouble when you write a paper that you don't know what it is. Then ITC even becomes worse. Because by the time you get to level 2, we bring integrated papers, which means you're going to write paper 1, not financial reporting. You get into paper 1, you figure out, what is this thing? Is it math? Is it audit? Then let's jump to comprehension of the scenario. How many times have I sat down and said, today I'm not writing any stuff during my study time. All I'm interested in is I'm going to take a scenario, read it through, and say, you know what? The case here is we started here. This business is doing 1, 2, 3, 4. And after the background, these are the situations which came. And this is how they interrelate. This is how they link together. How much time have I taken just to understand that scenario? You've got 30 minutes reading time. 30 minutes is not enough for you to go through 9 pages and identify issues, which is why skill number 4 does not say it's identification of issues. It's comprehension of the case. So if you find yourself during the 30 minutes reading time, opening a standard, the standard has got nothing to do with comprehension. So you're missing the point. And you're likely going to fail. So for your end of year, I'm going to be in the exam room during reading time. And if you open the standard during reading time and if you see me giving you that look, that's a sign to say, close that thing. Read, understand. Because the idea is you can only pick an issue after you understand what's happening. And you realize when you come back to the provision story, people missed issues because they didn't understand the scenario. Then your requirement, I think we talked a lot about the requirement, understanding the required. This I will not spend too much time talking about. All right. Then the last one, which is your planning. Now, your planning is key for me. Your planning is the difference between passing and failing an exam. Now, the rules are, how many marks do you need to pass? You need 50 marks to pass. How many marks do you need to negotiate? Because this guy is not negotiating anything. How many marks do you need to negotiate? Black guys, I was close. I already passed at the 3. How many do you need? Okay. The minimum based on the rules of the institute are you need 40. to negotiate your way out. Now, what I mean by negotiating your way out is what ICAs and SICA do is they say you need to pass a minimum of 2 and the other 2 should have a minimum of 40. But after we take all 4 courses, your average should be above 200 marks. Now that rule applies to ITC. Doesn't apply at CTA level. But all I'm just saying is, at CTA level, we want a 50. If things are really bad, at least be in the 40s. At least be in the 40s. Okay. Therefore, how can I get between 40 and 50 marks? That's the question. Okay. The idea is not for you to get 100 marks. If you get 50, my job is done. So, for you to get a 50, you need to understand the structure of the paper. How do marks get generated? Now, let's talk about how to get 50 marks. The first thing is, each and everyone has got 2 marks or 2% for simply writing required A and you put some ink there. Doesn't matter what you're putting, you put some ink there and then you conclude. By the virtue of attempting, you get 2%. So each and everyone sitting here has got a 2%, unless if you submitted a blank script. So when you look at the number of marks which are on your script versus what's sitting on my CAA, there's a 2% difference. That's not a mistake. Okay. I know some of you were like, I've got extra 2 marks. Let me not even talk about it. We know those 2 marks. Right. So you start at 2%. Great. Now you need 48. Pass. Then when you go through each 100 paper, 100 marker, when you go to the required section, each 100 marker has got 5% allocated to communication. So if you go to this one that you wrote, quickly look at it. Right, there you go. So for this one, I think I took away 1 of your marks. But ideally, you should get a standard paper has got 5% allocated to communication. So here is how to get the communication marks. You got part A. Look at A. Part A says the communication here is for clarity of expression. Without even looking at the required. If I say part A, the accountant was incorrect in treating PPE as an intangible asset. This is sabotage. Did he say, right there? Now, if I can read that and it's clear that this is wrong, another amount can be what? Provide journal narrations if there is a journal that we expected to prepare. Okay? You are left with 10 seconds. And you can see there's one mark there for communication. Journal narration. What you do is open a journal. Debit PPE. Credit cash. Bring purchase for PPE. The journal is wrong, but the narration is correct. You know what? So which means each and every one knows when you get an exam, out of the 50 marks that you require, you should already start with 7%. 5 for communication plus 2 for free. I'm putting something down. So you should start at 7, everyone. Which means, ideally, if you got 7 in these tests out of 100, ideally what you're saying is you didn't even attempt to apply yourself. You simply communicated and gave back your script. Then we talked about communication, which is in the form of logical flow. You still remember that one? Okay. Logical flow simply meaning whatever that you're saying, does it have logic? Is there some sense in what you're talking about? There's one funny journal entry that I saw when I was marking, which was debit bank credit cash. Yeah. So I'm not making this up. If you know, you know. You are the one. And I was trying to figure out, how did this person ever think that you can pay $10,000 to be asked to transfer money from the cash box to the bank? No way. You're missing something. Okay. So your logical flow, remember, we talked about accounting treatment. That's all we examine in financial reporting. Understand the accounting treatment. Even if you open your standards, you go to the contents page. Your contents page is structured in the form of an accounting treatment. What class is it? When should I recognize? What amount should I put under measurement? How should I present this thing? What further information should I disclose for you to further understand? That's all you need. If you give me your response in that form, then there is logical flow. You get your 1 mark, despite what you're writing. Okay. So communication marks, let's get those ones. Then the next thing now is, we talked about as part of your skills, technical. It's part of them, which means the examiner is also asking you, do you know the technical, the concepts related to financial reporting? Which means if you give back that technical, you should be able to pass. Then application it's a separate thing. So you can have the technical skill but fail to apply. That's still okay. You lose the application side, but at least get the technical side. So from the 100 marks which are there, you have got close to about 30 to 40%, which is basically for technical knowledge only. If you've got your technical knowledge, you should get close to about 40% of the marks which are there. Which, if you add with the rest of what we've said, will take you to 47%. Then the difference between the 47% and 60%, that's now the easy marks for application, correct application. That will take you to 60%. Then the other 40% to get to 100%, yeah, that's not the difficult part. So everyone should at least get a 60% in the exam. Now, let's look at this. I want to try for someone who understood exam technique, how you could gather marks. So requirement number A, we'll go through all the requirements. But what we want to do is we want to note the marks as we generate them. So I'm assuming we are starting at 7 marks. Happy? Okay, because those 7 are easy. From there, let's go. Part A. I'm assuming everyone still remembers this case. Okay, let's quickly go through this scenario so that I don't make unnecessary assumptions. Okay, so quickly break down the scenario together, just the understanding part that I was looking for. Okay, right, so here's the thing. This is what I thought everyone would do during reading time. The first thing was to note that there is question 1 which has got 88 marks, which means there are 2 questions. From there, I move on. I've got a company which is called Bunny Group Limited. Very important thing is this is a group setup. So there has to be more than one entity there. And the other, it's likely it's a subsidiary, associate, or it's a joint venture. Then moving on, they then gave us the background about the entity, what they do, going down there. But very important, they gave us the year end there, which is 31 December 2018. The moment I see a year end, I need to put a timeline. Which period am I dealing with? So I'm dealing with the period which is starting from 1 January 18 to 31/12/18. Which means if I see anything which is this side before the beginning of the year, 2 possibilities: either it's a prior period error or an acquisition of a subsidiary, which when I'm consolidating, I still need to redo those prior years again. So acquisition date plus the since period to get to the beginning of the period. Event which is on the other side, the right side over there. It's after the reporting date, so it has to be, becomes what? IS 10, an event after reporting period. All right. Then quickly moving on. Then they gave me financial statements for the 3 companies, which is Bunny, Fox, and Pax Limited. From there, my main interest is these things. Notes. For everything which has got a note, that means they're saying something was happening down there. Also, other things that I'm interested in is question marks. That means that thing has to be calculated at some point. Yeah. But not too much to stress during reading time. During the 30 minutes reading time, just browse through and move on. You won't get much information from the financial statements during reading time. But after the financials, this is where the whole story begins. Now, the case study is often broken down into either you will see notes or you will see sections or you will see issues. What it simply means is there is no way we're going to test one concept. And one concept has got 100 marks. So your case study is broken down into further small case studies. You need to identify those further small case studies. So the first thing here was there was a brief background there, which was in order to further catapult their growth prospects, manage board of directors with the support of the then all right. We'll be back just now, and there we go. Yeah, we're back online. Right, so I was saying the first story here was acquisition of investment in Fox. Now, what information was important for you during reading time? Number one, when did the acquisition take place? So we're given the date there, 3 January 2018. That's when the acquisition took place. I'm like, okay, so this is a current year acquisition. Number two, what form of power did we obtain after acquisition? Because I understand you need to consider power. And here they say the 75% was controlling stake. I'm like, okay, great. Can I comprehend what that means? That means it's a subsidiary. Now, okay, great. So I got a subsidiary. Then, from there, I am given information about the purchase consideration. Then they said the purchase consideration is broken down into 2 tranches. Did you comprehend the difference between the tranches? One was a payment today. The other tranche was a deferred payment. So that's all I need to know. So I got a payment today and I got another payment which is coming through in the future. For the payment today, there was another further comprehension that you had to make, which was the payment is not simply cash, but the payment is also what? In the form of an asset. So we've got a property that we're giving away, which was property on number 1 Mount Pleasant. I'm like, great, I understand the consideration which is there. Then further to the information on the consideration, they then further went on to give you more information about its acquisition date. Now this thing, when it came back, it's now making funny images. We are told that on the same date, the assets and liabilities were not at fair value. There are 2 assets that were not at fair value, which was the building and the right of use asset. That's all I need to know. Then from there, they give us further information about the right of use asset, what was happening, blah, 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 blah. That doesn't matter. I'll come back to that when I see the required. But what's important for now is I know that the right of use asset is not at fair value. That's it. Then you jump on to the next one. Then they started talking about the accountant of Bani further informed you that there are issues, financial reporting issues. Issue number one was there's a building rented within the group. So comprehension, there's an inter-group transaction. Done, that's it. And what's the form of the inter-group transaction? They say Fox has got a building in Bari that has been leasing out to third parties under operating lease contracts. On 3 January, Fox started leasing the building to Bani, which it uses for manufacture and adaptation of wood boards. And then blah, 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 the rest of the information there. So what I know there is, this whole thing was investment property in the subsidiaries books before and after acquisition. So they didn't change anything. Then issue number 2, there is an accident at work, which is that. Accident at work for this guy who was dumb enough to cut his fingers. So what happened with this guy is there is a law which says you cannot have this guy operate a certain machinery without proper training to do that. If you go on and use this guy to operate the machinery without proper training, what happens is you have breached the law. Then the company comes and says, you know what, you should go for training. So they send the guy for training. The guy then doesn't go for the training. On the day of the training, he's doing something else. And the company comes back and says, look, we asked you to go for the training. We paid money for the training. You didn't do as we asked. Therefore, we are assuming you go trained. So operate. The guy starts operating, gets his fingers cut off. Now, the law further on goes to say, if an accident happens as a result of that, the company is liable for all the hospital expenses or the medical expenses as a result of the accident. So the guy goes to hospital, there are medical bills there, and then he pays for them, he comes and makes a claim. The company refuses to pay, the guy sues. So you need to pay me that amount. But after suing, the guy leaves the country, nowhere to be found. That's all I need to understand. I've comprehended the scenario. That's good enough. You move on. You don't need to figure out if this is a provision during reading time. All right. Then next, investment in PACs, 33% shareholding over there. They gave us an agreement on how this thing is going to work. That's it. Then you go to question 2. Question 2, given Zwa Limited. So you're advising Zwa Limited there. You're told that Zwa Limited, they want glycogen, some product, some vital chemical. So they form another company with VC, they formed VC Pharmaceuticals with the other company, what is it called, Medical something. Let's see, what's the name of, Medicine Limited. Then the structure of the arrangement in terms of how they can operate together, and that's it. Now, we said we want 40 marks, and I was saying the other marks are for concepts. So I want to split concept and application. Just to see how you would get all the marks related to concepts. And we'll talk about the additional which are for application. So here's someone who's studying at 7 marks. And they get to required number A, which says, discuss how the incident in issue number 2 at work impacts 1, the 2017 separate financial statements of Fox, 2, the consolidated financial statements of Bani Group at acquisition date of the investment in Fox. 1 has got 16 marks, which means do more work there. 2 has got 3 marks, which means do less work there. Journal entries are not necessary. Don't put journal entries there, but communicate. Your communication is there should be clarity of expression, which means if you had gone to note number 1 and say Fox should do nothing, you go to 2, in the consolidated financial statements do nothing. Full stop. That's clear. You get your mark. So, let's break down that required. Number one, this was a discussion question. If you're discussing, what are you doing? Let's go back to that concept again. If you're asked to discuss, what are the steps? In other words, what is the task at hand? So we know the task is to discuss, but what exactly are you doing if you're discussing? Let's quickly go through, recap those procedures. Number one, thank you. You need to ID the issue. Number two, you need to state the principle. Number three, what do you do next? After stating, you need to apply. Number four, you need to, what else do you need to do? If you apply yourself, next thing is, you need to conclude. Number five, what else do you need to do? You need to recommend. So here's the thing. You are sitting at 7 marks now. From part A, those 16 marks, they're broken down into 2. So I definitely know that I need to conclude what should happen in Fox books. I need to conclude what should happen in the group financial statement. Confirm? You got 2 marks here. Just for concluding, doesn't matter what you concluded. 2 marks. Now you're at 9 marks. Okay, let's now recommendation. Now let me explain something about conclusion. Your conclusion should talk to your application up there. So if your application is going west and you conclude east, then you lose the conclusion mark. Your conclusion should follow through the discussion that you had. Recommendation, it's not every time that you recommend only if it's necessary. Okay, so if, for example, there's a wrong treatment which was done, that means you probably need to recommend that, no, look, you need to disregard what you did before, reverse the journal entries and raise this. So recommendation is not always that you get the marks. But what we now know is you got 2 marks for conclusion. So you are now at 9. That's 2. Next, application can only happen if you state the applicable principles. So for stating the applicable principles, you have got some marks that you can get. Now let's go back and look at that required again. The accident happened in 2017. Confirm this is the year in which the accident happened. So that means we are talking about the current year as far as the requirement is concerned. They're saying when we're talking about reporting for 2017, what should have happened? So in the 2017, we're not talking about the prior period. We're not talking about an event after reporting period. We're talking about something that happened in the current. Let's talk about it. What should we do with it? Agreed? Now, the first thing to note was this guy is sued, which means we may have a potential obligation to pay this guy. But the requirements did not say discuss how we should account for the lawsuit. If it said discuss the lawsuit, you'd only discuss to the extent of the amount sued. The required says discuss how the incident impacts the financial statements. So I had to look at the whole incident. So where did the incident start from my understanding, from my comprehension? That incident has got two things. It has got a law which was breached. There's a regulator who charges a penalty at the point of breaching. Then there's another guy coming through who's saying, I've got my fingers cut off, pay my medical bills. So that the impact of that incident, there are two impacts. Impact related to the laws and regulations. Impact related to the medical bills. Agreed? So we first need to start with what was the impact related, what was the issue related to the law. And from there, say, number one, did we breach the law? Do you think there was breach of law? Yes. You let someone operate machinery when they were not properly trained, so you breached the law. What is the impact of the breach of the law? What is the impact? You need to pay a fine of 5,000. Now go practical. If you, am I correct if I say if you slap someone today in class and the matter is taken to police, you need to pay a fine for slapping someone. Now, the moment you slap someone, do you go to the police and say, I just slapped someone, I'm here to pay my fine? You don't. What do you wait for? You wait for the police to come to you and say, you slapped someone, therefore you need to pay. Agreed? So let's go step by step. Number one, by slapping a person, have you breached the laws of the country? Are you obliged to pay as a result of doing that? No. No. You don't have an obligation. Let's separate obligation and probability of payment. Those are two separate things. It's like, let's remove the monetary figures. It's like if you kill someone today, but you have not been caught, are you obliged to serve a sentence in jail? No. You're not. Huh? Now, remember I asked 37, guys. What is an obligating event? What created the obligation? Is being caught what creates the obligation? No. Is killing someone the one which creates an obligation to serve? Yes. So you make someone work without proper training. That's breach of law. So as a result of that, did that action create an obligation to pay a penalty? Yes. Number one. So the moment we've got a present obligation, the next question becomes, should I pay or not? So is it a liability? Or if it's not a liability, it can be a provision. What is the difference between a provision and a liability? Aha. For a provision, there is some form of uncertainty. For a liability, there's no uncertainty which is there. Agreed? Now for this event, for Emma, was it Emma? No, it was, okay, wherever that was. So we said you've got a present obligation. Is there something which is uncertain? There. Let's start with the amount. Do you know how much you need to pay as a penalty? You do, great. Do you know when you are supposed to pay that penalty? No, it depends with what? Depends with whether they find out. If they don't find out, I'm not obliged to do anything. If they find out, so if they don't find out, then I may carry that probability for 2 years, that obligation for 2 years, and eventually write it off. If they manage to find out, then I'll have to pay at that point of finding out. So do you agree that the timing of paying the penalty was uncertainly dependent on them finding out? So we likely have a provision. Yeah. Yes. Great. So here's what he's saying. When you go through the scenario specifically says the regulator knows that people breach this thing. So what they do is they know that after breaching, people get hurt and people sue. So what they do is they closely monitor the court cases. For each court case which is raised, they know that there's a breach, so they follow up. Say, we want our payment. So which means still the timing is still uncertain, because the timing still depends on at what point would they find out. But now, all of this is something else. The first thing which is important for me is the moment you pick that this is likely to be a provision, it's a discussion question. You have to test for a provision. Agreed? So the first thing you say, state the principle, which means I need to state a provision is an present obligation or a liability of uncertain timing or amount. 1 mark. Just stating that. The application is something else. Then from there, if you conclude that there's a provision here for the penalty, at what point do we recognize a provision? What are the rules for recognition? What does the standard say? Because remember, the required says discuss the impact to the financial statements, which means accounting treatment. So recognition, you classify it as a provision. Now, should we recognize? What is the recognition criteria? Number 1, can the amount be measured reliably? Number 2, what's the other one? Is that what it says? Look again. Yes? It's probable that there will be an outflow. Those two. Just for stating that. Another 1 mark. Then you go and apply now. You said for recognition, amount should be measured reliably. So we measure provisions at its best estimate. Still remember, do we have an estimate for the penalty? Do we know the figure? Yes, so it can be measured reliably. Probability of outflow. Is it probable that there will be an outflow? Yes. Why do we say it's probable? Because these guys are closely monitoring all the court cases, and ours is already in court, which means it's likely that they will find out. Therefore, let's conclude if it's a provision or not. Then you do your conclusion. Conclusion was already given. Did we give a mark for the conclusion? No, not yet. Then you conclude 1 mark. So just by part A only, as well as the other skills, you should be sitting already at 7, 9, 10, 11, 12. By looking at A1 subsection A. The other part was the guy who has been injured. Now for that guy, we do another similar test again, but here there are 2 things now which which can potentially happen. You already know that this guy is nowhere to be found. So one could have said, let's first start by testing a provision. Someone else would have said, this is likely to be a contingent liability. Rather, let's test for a contingent liability. Regardless of which way you went, it was okay. Because you would have stated a provision is, or you'd have stated a contingent liability is either a possible or a present obligation. You still remember? So, for stating the concept of a contingent liability, another 1 mark. Then you start testing. Both a person who's gone provision side and a person who's gone contingent side, you were all required to test for present obligation because that was the likelihood. If you had gone possible, you'd have missed the concept. So now, let's start with that. Why would it be a present and not a possible? Why would you rather test for a present obligation whose probability of outflow is low, instead of saying it's a possible obligation, therefore let's raise a contingent liability? So go back again and look at the case. The guy got injured at work. The law says if the guy gets injured at work and he was not trained, you should pay his medical bills. Agreed? So confirm that as far as medical bills are concerned, we are supposed to pay. So we've got a present obligation to pay. So your application should have gone that way to first say, let's prove present obligation. We can only prove present obligation by looking at, number one, what is the obligating event? The obligating event is the past event. So in this case, what would have been the past event or the obligating event? Is it not training the guy? Do you think it's not training the guy? No. Is it using the guy who has not been trained? You think so? I don't think so. Employing him. Says employing him was the problem. Think about it. The obligation is the medical bill. So by using someone who's not trained, does that automatically create an obligation to pay medical bills? No. Is the past event having this guy cut whilst you had forced him to work without being trained? So the point at which he got injured, you're saying that's the one. So if you get injured but you don't go to the hospital, are we obliged to? No. Do you think the obligating event is this guy going to the hospital and getting treated as a result of getting injured on work and having not been trained? Had you not gone to the hospital, we would not be liable. But the problem is you guys went to the hospital. We could have looked for our own guy who would just put a bandage on you. So do you see the obligating events are different for the penalty and for the medical bills? For the penalty, the obligating event is using someone who's not trained. Whether they get injured or not, that's another thing. But the fact that this guy was not trained and you used him, obligation arises. For the other guy, the obligating event is getting treated in the hospital whilst this had happened. So I always say, for provisions, when you're discussing about the obligating event, you always consider the walk-away test. Do you still remember the walk-away test? Walk-away test being after this which has happened, can I walk away without paying? So I would still accept someone who would take for the medical bill, someone who would take the cutting off of the fingers to be the present obligation. But if you do a walk-away test, someone can actually say, you can't just walk away after I got injured. So the walk-away test can be proved on that. So I would still be fine with someone who raised that as the obligating event. But the most important point is consider the walk-away test. What makes you say, now I cannot just go off the radar. This guy will look for me. Okay. Then, after putting down the definition, so you go contingent liabilities, blah, 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 you apply. You concluded on, we've got a contingent liability. Was the present obligation, but the possibility, the probability of me paying is so small. If something is not probable, what percentage should it be for you to say this is not probable? Is it likely? Confirm probability and likelihood is kind of like the same thing. Yeah. So when you say something is likely to happen, this is something is not likely to happen. What's the percentage? More than 50%. Thank you. Anything above 50, that's likely. Anything which is less than 50, that's not likely. So they've concluded here that the probability there was what? Was it 30% or something? 30% probability. So it's unlikely. Therefore, though it's a present obligation, we're not going to raise a provision because the probability is low. Since the probability of low, it becomes a contingent liability. Conclusion that this one is a contingent liability, another mark. So far I've ignored all the marks for application. For someone who would apply, it would be sitting somewhere at around 18, 19 now. Yes, so I'll come to that. Now, further on to probability, they then said the entity considers a certain amounts which are above a certain percentage to be material. What was the percentage? 5%. Now, what does that mean? What are the relevance of that information? What is the relevance of that information? Yes. Okay, great. Thank you. Now, let's revisit the technical. The technical says when you conclude that something is a contingent liability, what should you do as far as financial reporting is concerned? No, it never says that. What exactly does it say? Disclose if there is an if. What does it say? No, it's not probability. It doesn't use the word material. Yes. Thank you. It says for contingent liability, you need to further go on and disclose if the transaction or the probability of occurrence is not remote. For stating the principle. Then you go and apply yourself. Do you think it's remote? How do I know a transaction which is remote and one which is not remote? And then look at materiality. Anything which is below materiality, that's remote. Anything above materiality, that's not remote. So for concluding that this one is remote because it was above 5, confirm? Conclusion. 1 month. So far we've done A1. We're now sitting at 7 9, 10, 11, 12, 13, 14, 15, 16 months. Part A1 only, before application. Then you go to A2. You concluded that there's a penalty, which is a provision, and there is a contingent liability in relation to the medical bills. So this required then specifically says, I want you to talk about this whole thing at acquisition date. It says here, discuss how the incident impacts the consolidated financial statements at acquisition date. What is the impact of provisions in the subsidiary at acquisition date? What is the impact? What does the standard say you should do when you acquire a subsidiary? Thank you. So the standard says at acquisition date, the acquirer shall recognize all assets and assumes all liabilities. Concept. Since this provision was already a liability in the books of the subsidiary, it would therefore be assumed at the value that it has. Application. I'm not giving application marks. Then, the contingent liability. With the contingent liability, what does the standard say about contingent liabilities at acquisition date? What does it say? Yeah. Mm-hmm. Right. Missing words. Almost. What exactly does the standard say? Recognize if. Thank you. Right. So you started from the bottom of the standard moving up. So the standard says, at acquisition date, the acquirer shall recognize a contingent liability as a provision if it's a present obligation. However, the probability does not matter. The probability of outflow does not matter. Agreed? For stating the principle, another 1 mark. And then you apply. Since that one is already a present obligation, probability does not matter anymore. Therefore, this one should also bring it into the books. But it was not in the books of the subsidiary. So as we come to the consolidated group financial statements, it needs to come through now as a provision. Then I've concluded. So I understand people might have difficulties in applying, but at least the concept should have been there. By stating the concepts, you could have easily passed this question anyway. Let's look at B. Prepare the pro forma consolidating journal entries to recognize the acquisition of Fox if the separate, again, 7 marks, and in the consolidated. Let's start within the separate. The journal entries in the separate books, when you acquire, that is IS 27. Am I correct? What is the journal entry in IS 27 again? Debit what? Debit investment. Credit what? credit the forms of considerations which are there. That is the concept. If you had this journal entry correct, 1 mark. For concept, regardless of the figures. Then the rest was now to bring in the correct application, which was number 1, I've got cash which is being paid upfront. That's tranche number 1. Tranche number 1 also had a building, confirm? So I am de-recognizing a building. But this building I'm de-recognizing at what? At carrying amount. That was another concept. So for putting the correct carrying amount there, 1 mark. But that was just a concept. Then you'd have a gain on disposal. So it would either give you the 1 mark at carrying amount, they would give you the 1 mark at gain on disposal there. If you've got both, it would still give you 2 marks. Then you had another credit, which was, there was a deferred consideration, which you simply had to take future value, N, I, then you discount it to PV. You get half mark, half mark, half mark, half mark. And that will give you 2 marks here. I think those are pretty easy 7 marks. Straightforward. Then, now look at the most interesting one. Prepare the journal entries for the consolidated. But before, okay, let's look at 2. The consolidated financial statements of Bun Limited, the journal entries to consolidate. But for the year ended, meaning that your journal entries should start at acquisition. They move on to the beginning year to give you this period being the since. Then you've got the current over there. Now, I don't want to talk about the application. Let's talk about just the concepts only. So here is someone clever looking for easy marks. That question at 49 marks. I understand that my journal entry should be broken down into 3. At acquisition, since, and current. So I start. At acquisition, debit all assets acquired through doing this journal entry, because it's an elimination journal entry. So if you eliminate equity, you remain with net assets. So debit share cap, debit retained earnings. This one is a concept. 1 mark for simply doing this. Then from there, the next thing is what? You had fair value adjustments which had been made. You had a fair value adjustment for a building. You had another fair value adjustment which was supposed to happen for right of use asset. Then you also required to adjust the lease liability. The concept there might be difficult. But what I understand is for this building and right of use asset and lease liability that you've adjusted for, there are tax implications as a result of IS 12 paragraph 15b. Now, this figure for tax, it doesn't matter what it is. You put it 25.75 times your adjustments there, you get 1 mark. It's a concept. Then, for knowing that I need to credit my NCI, and that my NCI, I need to multiply it at fair value if it's measured at fair value or the proportionate value. Another 1 mark for that concept. Whether the figure for NCI is correct or not, that doesn't matter. For knowing that, I also need to credit that investment which I created in the separate books, regardless of the figure, as long as the two figures are linking together. That's a concept, 1 mark. For understanding that, I need to balance off this journal entry, so it either balances with goodwill or it either balances with a bargain on purchase, regardless of the figure. It's a concept, 1 mark. So just for this only, we have not looked at your application, whether you're doing it correctly. You had 1, 2, 3, 4, 5 marks. That's fine. You know it what? 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 18 plus 7. That takes us to 25. You now have a quarter of the marks required. Half of the marks you need to pass. You have not yet started applying. You have not yet attempted other requirements. Let's further go on. You have finished the acquisition journal entry. You go to the next. Now, for all the adjustments which I've done there, there is subsequent impact which is there. So since I adjusted the building over here, that means the depreciation which has been taken is understated. So debit depreciation, credit accumulated depreciation. By this figure here divided by the remaining useful life. Whatever figure that you get there, 1 mark. It doesn't matter whether it's correct or not. If the concept is correct, you get 1 mark. It's a concept mark. But for every depreciation here, this is P&L. So by adjusting something which has got an impact on the P&L, it affects the profit before tax, which means it affects the tax calculation. But since I'm adding a depreciation, I'm adding an expense, which means the impact there is it reduces my tax expense. And it's a temporary difference because the taxman does not consider depreciation but considers wear and tear. So it creates a deferred tax. For that concept, another 1 mark. As long as you got this journal entry, 25.75 of whatever that you have up there, 1 mark. You made an adjustment here for right of use asset. You know from your concept that right of use asset is subsequently depreciated. So if my right of use asset has gone up because it needs to be at fair value, that means the depreciation related to right of use asset is understated. So another debit depreciation now for right of use asset. Credit accumulated depreciation again, 1 mark. And this one also comes with its own tax implications. 1 mark. For knowing that I made an adjustment to the lease liability here. So the moment you adjust your lease liability, it has got an impact on the finance cost side. Therefore, there's a journal entry which needs to be done related to finance costs and lease liability, 1 mark. But that journal entry for finance costs, it's hitting the P and L. Therefore, it has got an impact on deferred tax and tax expense, another 1 mark. It doesn't matter what the figure is. At this point, we stop marking using the marking guide. We start marking based on your script. Have you done it? That's all that matters. Then from there, you then say, I've adjusted for all these line items, but here is a fresh problem. You gave me a profit of the subsidiary that you say this is the real profit. Before we talk about that profit, the problem is if the profit is 500,000, and I've got 80% shareholding. You're telling me that I'm supposed to take 80% of that figure. But that figure is distorted. Because in that figure, you deducted rental expense of a building that I gave to you. So to the group, it's not an expense. So there's a problem there. That means we need to adjust. If I understood my requirement goal, I already know that on this day, I have debit and credit relating to the rental expense, which the subsidiary is the one with rental income because they were renting to the parent. The parent has got a rental expense. So based on that, I already know that there's a problem there. That needs to be adjusted. But the scenario, I'm not quite certain if it specified that this is a short term. So it specified that this is a short term of only 12 months, which means the parent company is not going to raise a right of use asset. Was they elected the practical expedient not to do that. So which means debit your rental income, credit your rent expense. A mark for that. If you do a deferred tax impact on this one, you get issues. Because whatever tax that you're going to talk about is going to be in and out. So it's waste of time. And we left another one there. On at acquisition date, you also created the contingent liability. You still remember? The one relating from up there. Now that contingent liability, it's a one mark for whatever figure that you have there. As long as it is the same figure sitting in your part A. So now for concepts now have an addition 1, 2, 3, 4, 5, 6, 7, 8. You now have 8 marks. For 8 marks, you've now moved from 25 to 32. We are not yet applying. These are just concepts which were in the paper. Then from there, you understand that when it comes to attribution of profit, when we consolidated, we took 100% of A, of P, 100% of S, which means the retained earnings from the subsidiary came in 100%. But the retained earnings line item at the group level only represents retained earnings belonging to the parent company. So I need to remove the profit element belonging to NCI so that it doesn't sit in retained earnings, but rather it goes and sits in NCI. So I need to raise a journal entry which is debit NCI to remove from the P&L and credit rather NCI, which is sitting in either you can call it SFP or some can call it statement of change in equity. The latter is the one which we prefer. For raising this journal entry and putting whatever figure that you have there, you've got 1 mark, it's a contract. Then the next thing now is this NCI has to be correct. So what you then do is you understand that I cannot simply take the profit and allocate it like that. Sorry, this is in the current year. I skipped the since period. In the since period, this will be replaced by retained earnings in the since period. Then you jump into the current period. In the current period, so same thing applies here when we're saying depreciation. In the since period, this will be retained earnings rather. Over here, another retained earnings, if it was in the since period. But the reason why we went tax expense over here and we went depreciation here is because the acquisition was done in which year? In the current year. So since the acquisition was done in the current year, that's why there was no need to do the retained earnings. So here I was talking about what figure do I put under NCI. You're then coming through to say the profit before tax from the subsidiary was this much. We cannot go ahead and share this profit because this profit is wrong from the parent's point of view. So the parent company is coming through to say, look, subsidiary, you went on to add rental income, which when we look at group level, you don't have any rental income. So remove the rent. You also did not consider the additional depreciation. As a result of the building and the right of use asset, there is that additional depreciation. Right of use asset, building. Bring it through. You also did not consider the additional finance cost as a result of adjusting the lease liability. Bring that through. You also did not consider the tax implications. You go and take everywhere we said tax expense, tax expense, tax expense. You sum them up, you bring it here. Then he said the true profit that we should be sharing is this figure, not the first figure. No, the impact to the P&L only. So when we did this first adjustment at acquisition date, this adjustment does not go to the P&L. It's going to affect directly the asset. But the subsequent, that's when you start hitting the P&L there. So for any adjusting journal entry, that you said P&L, 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 what it means is the profit of the subsidiary is being adjusted. So now when you come to attribute that profit now to NCI in this journal, you cannot go and attribute in an adjusted, yet the group has said let's adjust. So you bring in those adjustments, so that this was supposed to be profit after tax. You bring in those adjustments, then this figure multiplied now by the 25% for NCI. Then that's the figure that you then bring to NCI there. So for making those adjustments, you got 1 mark here, 1 mark here, 1 mark there, 1 mark there, 1 mark there. Now, these marks are not for correct figures. These marks are for simply knowing that that rent which I put up there, if I bring that same rent down here, you get a mark. I put a depreciation up there. Whether it was correct or incorrect, it doesn't matter. For bringing it down there, knowing that it makes an adjustment, brings a mark. So if you had for adjustment 1, 2, 3, 4, 5 marks for the concepts of adjustments, you move now to 37 marks. Now we are way past what some people got here.
Okay, for those workings that we showed here,
yeah.
What about someone who uses the analysis of equity in his working?
Now, the challenge now is, you see this, let me go through each and everything, because I think this is a very important question. If you created an analysis of equity, now here's the first thing. The required says prepare pro forma consolidating journal entries. So as long as whatever that you have is not a pro forma consolidating journal entry, it will not be marked. Unless if it's a working which has been requested by the pro forma consolidating journal entry. So let's come back to what we were doing. So if you come back here, at acquisition date, I'll come here. This share cap, these retained earnings, these adjustments for buildings and right of use assets, and this NCI and investment, you will see this in the analysis of equity. Agreed? But they are not journal entries, so they will not be marked. You can do your goodwill calculation in your analysis of equity. That's good, but it's not a journal entry. So what we do under goodwill here, remember under goodwill, we're giving a mark for the concept, not for the figure. So we're not going to give you marks sitting in the analysis of equity. We'll give you 1 mark for knowing that there's a goodwill that is sitting in the journal. That's all. You come here, your depreciation, all of these things. So everything that we've done here, these are not workings. This is actually answering the required. The only working that we have is the last part. Now my tablet is done. Okay, just a sec. Let me figure out what happened. Nah. All right, coming back through. Right, so I was saying the only working that you have here is for the NCI, which would expect you to then come here and say working 1. Then you go there where you did the working and say working number 1, and you reference. And this working cannot be found in the analysis of equity. In other words, if you found yourself doing an analysis of equity for this question, you wasted a lot of time. It was not necessary at all. It was not useful anyway. Okay. So we are sitting at 37 for concepts of A and B and communication marks.